This is the Asia Trade. I'm Avril in Singapore.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Signs of buyer fatigue in stock markets as investors evaluate risks, including tariff tensions and sticky US inflation. Oil is in focus on reports that Iran is willing to commit to not pursuing nuclear weapons. Tencent's US traded shares jump after quarterly sales grow 13%, the most in more than 3 years. And Boeing seals a record deal to deliver hundreds of planes to Qatar Airways as President Trump continues his Middle East investment push.
Certainly, Heidi, as we look at markets, geopolitics continues to be in the mix. I mean, we've seen much of this week. They've been rallying hard on this U.S.-China trade truce. So we're going to be watching very closely any signs of a further cooling when it comes to APEC ministers, trade ministers in particular, meeting in Jeju. Does that kind of enhance the odds of any forms of trade deals for these Asia-Pacific countries? In the meantime, to your point about this buyer fatigue really settling into U.S. markets, we are watching whether it's going to feed in through the Asia session. Certainly, we've already been seeing that in Japan just a day ago in terms of stocks there kind of pulling back after a relatively long winning streak. Today, looking at some of these Nikkei futures also looking quite soft there, Heidi.
Yeah, take a look in particular when it comes to the commodities and space when it comes to energy, because we're seeing that pretty steep reaction across oil prices, WTI at the moment at these developments over Iran. We're seeing already, of course, some of these prices falling for a second day after a 4-day rally for oil. But at the moment, we're hearing that Iran would commit to nuclear weapons, to no nuclear weapons, I should say, in a deal being reported. And that would be the deal with the US in exchange for sanctions relief. So we're seeing that reaction across New York crude at the moment when it comes to the futures trading session. As you said, that fatigue kind of settling in there, both when it comes to NASDAQ 100 futures and S&P futures at the moment looking pretty lackluster. Watching treasuries as well as sort of these expectations continue to be repriced as to what these inflation prints that we've had this week and the implications for the Fed timing going forward. But let's get back to our top story. And Bloomberg has learned that US officials negotiating trade deals are not working to include currency policy pledges in these agreements. Let's get the details now from our Bloomberg News editor, John Harney. So, you know, this is a pretty interesting aspect that could have significant implications for the deals that we end up getting.
Yes, the dollar has fallen about 8% since Donald Trump's inauguration, and currency markets, along with other markets, of course, with all the turmoil regarding tariffs and trades, have gotten rather jittery, fearing perhaps that the United States might prefer a weaker dollar as it pursues new trade accords. Scott Bessent, the Treasury Secretary, has tried to disabuse trading partners as well as no doubt traders and markets that this is not the case, and he's at two high-profile forums, including at the IMF meetings here in Washington recently. He said that the United States remains the premier destination for the world's capital.
John, as we also hear about Iran being in the mix in terms of, you know, committing potentially to no nuclear weapons, certainly, you know, there's that specter of what this could mean for oil supply globally. But what are you hearing in terms of the U.S. and Iran and what might be ironed out?
Well, clearly, Donald Trump seems to, as you know, even as he tours the Middle East, seems to have taken a great interest in a possible accord with Iran, a longtime adversary of the United States, going back, of course, to the fall of the Shah and the hostage crisis of 1980, late in the Carter administration. Of course, this is something that Israel under Benjamin Netanyahu does not want. And it should be noted that Israel is not on the itinerary of President Trump's trip to the Middle East. But, you know, again, nothing seems to be forthcoming at the moment. This is all somewhat speculation, but it certainly bears watching in the days and weeks ahead.
John, you mentioned Israel, which has been such an interesting dynamic or non-dynamic, right, in terms of what President Trump is not doing on this trip. What do we think is going on here in terms of this lack of engagement with Netanyahu, when we know that certainly previous and historically US administrations have been consistently very supportive, particularly when it comes to the conflict in Gaza?
Not only has the United States been very supportive of Israel, and I should not say that there's any less support now, but Donald Trump and Mr. Netanyahu have been very close since before the first Trump administration, and they're allies and seem quite friendly. So again, there's much that perhaps is going on behind the scenes. We really don't know. And another thing that happened recently was the release of the American hostage who has dual citizenship, who also has Israeli citizenship. That was done being free from Gaza by Hamas. That was done without the involvement of the Israelis.
John, while Trump is in the Middle East, we've seen, him really working to get these investment pledges a day ago from the Saudis, now the Qataris, but there does seem to be a bit of a gap between what Trump is looking for and what some of these Middle Eastern countries are able to provide. What is considered a win for him at this point?
Well, of course, we talked about diplomacy regarding Israel and Iran just now. But Donald Trump is clearly reveling in his role as, if you will, businessman, statesman during this trip to Saudi Arabia, Qatar, and the UAE. That said, I mean, you can say that perhaps there were some exaggerations over these investments, over the amounts, but they're substantial. He announced, or the White House announced, I believe it was $243 billion in Qatar today. That would include a substantial $96 billion of planes provided by Boeing and drones that were being purchased by Raytheon and other defense contractors. So certainly this trip has been good for American companies, even if maybe the numbers aren't quite what was presented at first, but they're not insignificant.
Bloomberg News editor John Harney, as really the news flow when it comes to Trump's Middle East trip continues. We do have some breaking news when it comes to Treasury One estates in terms of the management team. Sam Fischer being named as CEO, taking effect from October 27th. And of course, Treasury One has been historically one of these stocks and one of these companies in Australia that has been pretty badly impacted by previous bouts of trade tensions, particularly between Australia and China. But we've seen that sort of a recovery when it comes to the improvement of that relationship, and also pretty minimal, I should say, impact being seen from the impact of US tariffs as well on Australia and on its US portfolio.
Yeah, Heidi, I think it's really this tariff story that we are continuing to track. And indeed, we're hearing how Japan's top trade officials are skipping an APEC meeting beginning today in South Korea, potentially missing a chance to advance talks with the U.S. on a tariff deal. Our chief North Asia correspondent, Stephen Angle, joins us from the meeting venue in Jeju. So, Steve, kind of set the scene for us here. What are some of these trade ministers looking to achieve out of these meetings?
Yeah, well, it's first light here on the resort island of Jeju, south of the main peninsula of South Korea, where the 21-member economies, their trade representatives and trade ministers will be gathering. We're trying to figure out exactly who will be here, who flew in last night. We do know the Vice Minister of Commerce, Mr. Li from China, did come in from Beijing late last night. We saw him personally, but also Jamieson Greer, the U.S. trade representative, fresh off those talks with the likes of Li and He Lifeng in Geneva. He is going to be here, and that could sort of dominate the attention of the other member nations of APEC as they try to get some face time with Jamieson Greer. Now that they realize, okay, a truce can happen with China, perhaps we can get further on into the queue to meet with the U.S. officials, including Jamieson Greer, and eventually, of course, the U.S. Treasury Secretary Scott Bessent, who is sort of leading the charge in talks with China. Can other nations like Vietnam, obviously the host nation South Korea, they have other issues to contend with right now as they approach a very critical presidential election on June 3rd, and officials here have already said it would be theoretically impossible to come up with some sort of trade deal with the United States ahead of that election. But nevertheless, the trade minister will be here of South Korea as the host nation and we're hearing from local media that he will on Friday, tomorrow, meet with Jamieson Greer. So it's going to be a real how would you describe it? Just a crush to get some face time with Jamieson Greer to see what is the parameters that were not reported on that truce with China, and B, how does it affect what kind of negotiations could potentially be had between them and the United States as other nations try to mitigate those reciprocal tariffs that were imposed on April 2nd and then, of course, paused for 90 days.
Steve, even as we look for sort of more of the contours, the details of this détente, we're still getting more overtures from each side, right? Particularly from China at the moment. They've put a pause when it comes to these rare earth export curbs for military entities in the US. How significant is this, given that, China's hoard of rare earths and other critical minerals has long been kind of used as potential leverage?
Well, we're out in the middle of the ocean here, so obviously I'm not hearing what you just said, but I'm anticipating you are asking me about the pause by Beijing, their steps following the truce that was had over the weekend in Geneva. Essentially, what China is doing is following through on the verbal pledges that they made to Scott Bessent and Jamieson Greer to kind of lower the temperature, A, but also B, to kind of suspend those moves that they made to put those export bans on critical minerals, including those industrial magnets, which are critical to the U.S. supply chain in technology, but also essentially for the military supply chain for the United States as well. So China is going to put that 90-day, actually it was effective yesterday, a 90-day pause on the export of those rare earths and metals that are critical to the supply chain, something that Donald Trump has talked explicitly about, that would be a main goal of those talks over the weekend. So now going forward, we'll have to see how much dialogue, again, China and the United States can have to kind of hammer out a longer trade peace beyond those 90 days, and then we'll go from there. But again, here in Jeju, the emphasis is going to be getting face time with Jamieson Greer and seeing what those other nations, as I mentioned, including South Korea, the host nation, and then countries like Vietnam, Canada, Mexico, Australia. These are all member nations of APEC. We're also going to try to figure out who's coming and who's not.
And I'm sure you'll be keeping tabs on all that for our Stephen Engel for us there out of Jeju. Now, we also have breaking news for you when it comes to this journal reporting that UnitedHealth is under a criminal probe for possible fraud. It's said to have been a probe that's been active since at least last summer, and this is something that is centered around, I think, Medicare's Advantage practices. Again, UnitedHealth under a DOJ probe for possible criminal fraud, and we're already seeing that reaction in the after hours, the share price dropping about 6% there. Haidi?
Yeah, we're also watching the reaction that we're seeing to the downside when it comes to oil at the moment, right? We heard, of course, reporting that Iran would be committing to a deal that says no nuclear weapons development in exchange for sanctions relief, according to some reporting that we've seen. We are hearing that Shamkhani is saying that Iran is ready to sign a deal under certain conditions. So this is also why we're seeing that sort of extended sell-off when it comes to oil. It was already declining for a second day. We did have that pretty strong strong 4-day rally. We had the biggest weekly build in US crude inventory since March. So the sort of government data side, the supply side is not helping the situation either. But that sort of futures rally was almost a 10% element there. So we are seeing downside now. The sort of geopolitical expectations, the rhetoric on Iranian supply, Avril, is coming into play now.
Certainly something we're going to be keeping a close watch on. Coming up on the Asia Trade, Xero CEO joins us to discuss their latest earnings and business strategy, while Oaktree tells us why some traders are shifting away from equities towards bonds. Plus, we'll unpack Alibaba's fourth quarter performance with CLSA. This is Bloomberg.
Take a look at the reaction in oil. We're seeing WTI trending to the downside, a second day of declines there. A couple of elements at play. We had that sort of inventory build from the latest government data when it comes to stockpiles, but also these reports that perhaps we're getting closer to a deal with Iran. Iran's willingness there to sign a deal in exchange for lessened sanctions or removal of sanctions and no nuclear weapons. So we're watching that story very closely, but of course coming off the back of almost a 10% pop in that 4-day rally for oil futures. Let's take a look at how all of this plays out when it comes to the market open here in Asia. Wall Street, of course, also seeing a bit of fatigue when it comes to this trade detente rebound that we've seen. Garfield Reynolds, who leads our Markets Live Asia coverage, joins us now. So there's been a lot that's come from the Middle East trip, and at the moment we're watching how energy markets are going to potentially react.
Yeah, one of the things that Donald Trump and Scott Bessent, for that matter, were very big on before the beginning of this administration was the desire to get oil prices down. Now, while that was premised on a drill baby drill approach to US production, ultimately what's proved to be the most important part of that is of getting oil prices lower has been what's gone on with Saudi Arabia in particular, acting to discipline those who were pumping too much by threatening to flood the market, and in fact you're bringing more online. Now we've got the potential for Iran to be able to pump more in return for making some agreements on the nuclear front. All of that means that the supply out of the Middle East, that is what is in the driver's seat, sending oil prices down, so that even when you have the tariff relief, the apparent tariff relief, improving the demand outlook, you still have a lot of supply, and that's pushing crude back down to that $60 a barrel level. Looks fairly likely it goes back under 60, but not much further under 60. One of the things that comes into play, if it does go that far down, maybe even where it is now, is that creates a concern that US production would slow, because you're getting close to the possible break even for fracking projects, and with the potential that tariffs plus that weaker US dollar that we've been noticing, that boosts the cost profile a little bit. So it becomes not necessarily all that viable to boost US output further via fracking, which is the main method of boosting it. So somewhere like where we are now, maybe a little bit lower, is probably a medium-term floor.
Garth, you mentioned the dollar. I mean, we're hearing sources saying that they're not really, the Trump administration, going to include the dollar in any of these trade negotiations. In spite of that, do you think the trend for dollar is still intact for a lower trend?
Yeah, I think the medium to long-term downtrend for the dollar is going to remain in place. Part of that is that the denials that came out, and so far it's reported denials, and there's sort of a non-denial denial, if you like, as in it's not necessarily the case that there were no discussions that happened to touch on the currency. Korea originally said that the discussions did touch on the currency, but what came out from the person familiar that Bloomberg spoke to was that there wasn't any actual effort for currency policy pledges, because if there was anything like that, then Scott Bessent is the one who would be involved with that, which sort of China in particular, a lot of FX traders in China who are fairly sensitive to this idea that might revive some speculation that a stronger yuan gradually, if the PBOC has anything to do about it, but that is part of the price that China is going to need to pay to really push through with peace. So there is an overall understanding that the US wants a weaker dollar. The US dollar is very overvalued relative to its long-term averages, and a lot of currencies, including the yuan, are very undervalued on that basis. So you have the setup for the dollar to come down anyway based on fundamentals and positioning, and you have the overall messaging being that the US would not be averse to a weaker dollar, because that would improve the export competitiveness for US companies, which is very much what Donald Trump wants to achieve.
Garth, I wanted a final word on why we're seeing so many bearish elements for bonds at the moment. Like the 30 years got, what, an 18-year high?
Yeah, close to it, yes. Yeah. So, well, there's a couple of these going on there. One is the Trade-Truce is getting people to fade their bets on Fed easing. On Fed easing coming anytime soon. Secondly, there is the lingering concern about what the tariffs that are in place are going to do to the inflation outlook. Thirdly, the budget bill that's coming through, the big beautiful bill, has a lot of big beautiful deficits involved. That's a concern. And I think the final thing that's working is, again, you've got the attitude from the US administration. They don't like a too strong dollar. Big FX reserves are part of that reason. So there's a little bit of squeamishness about how welcome are we in treasuries. And you add in the extraordinary meltdown that we had about a month ago in the treasuries market. There's plenty of reasons for investors to lose some of their instinctive appetite for treasuries, and when you have those other factors going on, that helps to add to the upside for yields.
You've got 4 or 5 really good reasons, and then plenty more if you want to dig a little deeper. Garth Reynolds from our M Live Asia coverage there. More ahead on the Asia Trade. This is Bloomberg.
The story really today is about the dollar, with the US set to not be considering policies to weaken the greenback in tariff talks. But this could be unsustainable. This bump up we're seeing in the Bloomberg dollar index, certainly seeing a bit of softness already. It's about the fundamentals. More ahead on the Asia Trade. This is Bloomberg.
We're watching Tencent very closely in the China session, and of course, as the thick of China tech earnings come in, we're looking at Baba as well. But take a look at Tencent. These numbers are so encouraging, particularly if you kind of look at this company as a broader proxy for the domestic economic recovery, right, which has had so many challenges. The fastest growth since 2021. It's a great start to what is a very, very volatile year. We saw revenue for Tencent up 13% to just over 180 billion yuan in the March quarter. A lot of this being driven by its gaming and social media businesses. It's also, of course, investing heavily across AI, R&D and initiatives. But, of course, there's no expectation that that's going to be a positive contributor to the bottom line anytime soon. In fact, it is expected to kind of weigh on profit growth. But that longer-term revenue implications for AI integration across its products is still really positive. In terms of the share price, we've seen a gain of about 25% so far this year. This sort of ability to weather a potential Chinese and global downturn, I should say, has really been key to the Tencent narrative for investors.
Certainly, Heidi, and we're also watching for Baba's earnings set for later today, and the extent in which they are sort of a bit more resilient when it comes to tariffs, because they also can lean in to their domestic businesses. And similar to Tencent, we've also seen the shares of Baba. It's been fairly solid rally so far this year, but pulled away from the peaks that we saw in March. Bloomberg Intelligence is expecting, when it comes to local services, when it comes to its cloud business, that we overall still see pretty solid profit growth for Alibaba. Now, for more on the outlook for China's big tech, we're joined now by CLSA's Elinor Leung in the next hour. And we'll be, having more analysis on really these Chinese tech names and the extent in which that fuels the momentum for Chinese tech stocks' continued climb, Heidi.
Take a look at some of the other stories we're following on the corporate front. Honghai has cut its guidance for full-year revenue growth to reflect the potential fallout from the trade war. The main manufacturer of iPhones and NVIDIA-powered AI services sales will expand at a slower pace than its prior projection in March. The company's net income rose to nearly $1.5 billion in the first quarter, beating analyst estimates. CATL set to raise at least $4 billion in its Hong Kong share listing, set to be priced at the top end of the indicated range. Sources say the Chinese EV battery maker is telling investors it plans to price its shares at 263 Hong Kong dollars apiece. The total raise could rise even further if a 15% upsize option is exercised. Shares are expected to begin trading on May 20th. Bloomberg has learned that autonomous driving company Pony AI has confidentially filed for a Hong Kong listing. Sources say the offering may happen this year. Pony AI has announced expansion plans, including a partnership with Uber to launch robo-taxi services in the Middle East this year, and has gained a permit for autonomous vehicle testing in Luxembourg. Boeing has landed its biggest ever aircraft order, with Qatar Airways agreeing to buy up to 210 wide-body aircraft in a deal worth $96 billion. The deal was also provided a record order for GE Aerospace, as the pact includes 400 engines. The agreements are a big win for Trump, who's hoping to showcase his deal-making chops during this trip to the Middle East.
Kelly's telling me from Boeing it's the largest order of jets in the history of Boeing. That's pretty good. That's fantastic. So that's a record, Kelly. And congratulations to Boeing. Get those planes out there. Get them out there.
Meantime, Japan's top banks are seen raking in record profits for the fiscal year, seemingly shrugging off the uncertainty caused by the Trump administration's tariff policies. But the country's second-largest lender, Sumitomo Mitsui, kicking things off, saying it's still shoring up its buffers to prepare for a trade war. And for more, Asia investing editor Russell Ward joins us from Tokyo. So, Russell, it looks like these Japanese banks might be preparing for the trade war a bit more than anticipated?
Yeah, I mean, these are pretty positive results as expected. Record profit, capping off a record profit for last year and forecasting profit to rise 10% to another record this year. But there was definitely quite a hefty dose of caution thrown in there as well. The bank said it was booking forward-looking provisions last quarter of 90 billion yen for recession risks. So this is provisions for potential bad debts if the economy does fall into a recession stemming from these tariff tensions. And also the bank said that 100 billion yen of profit that it would have earned otherwise will not emanate because of this tariff war. So really, yes, they're forecasting record profits, but things would have been a whole lot better if this tariff war hadn't emerged.
What are we expecting from some of the others that we're looking to get numbers from? Mizuho, MUFG are also due.
That's right. Mizuho and MUFG are reporting later today, expecting more of the same, basically, capping off a record year of profits. Analysts estimate that they'll forecast for profit increases this year as well. They're also forecasting buybacks, which is what Sumitomo Mitsui did as well. They're continuing the theme of buybacks here with the earnings in Tokyo. But what we'd be looking out for really is whether the executives and the banks exercise the caution that we saw with Sumitomo Mitsui. I think we'll probably see a bit of that. Japanese banks do tend to be very conservative at the start of the fiscal year, even at the best of times. And really now with this uncertainty, we'll expect to see sort of that caution emerging through the results when they're reported this afternoon.
And Russell, what are we seeing in terms of what assumptions they're making on future rate hikes from the BOJ?
Yeah, actually, Sumitomo Mitsui kept its forecast, its official forecast for rates to stay at 0.5%. But I think, that generally speaking, that, because of all this uncertainty, because of the risk of a recession, expectations for rate hikes are diminishing. There's the sense that they won't be able to raise hike rates as quickly and as high as previously expected, and of course that's a bit of a negative for the Japanese banks who have been really counting on just that extra margin in their lending. So that's another sort of downside risk for the banks.
Asia Investing editor Russell Ward there. We will be live at JP Morgan's annual Global Markets Conference in Paris later today, speaking exclusively with CEO Jamie Dimon for his outlook on markets and politics. That's at 8 p.m. Thursday, Hong Kong time, 8 a.m. if you're watching in New York.
Now, former New York Fed President Bill Dudley says while the U.S. and China have dialed down some of the tensions on tariffs, many unknowns still remain. The Bloomberg opinion columnist told us the U.S. Central Bank has no choice but to wait and watch, despite pressure from President Trump to cut rates now.
They don't know where the tariffs are going to land, number one. And two, they don't know what the effects of the tariffs are going to be on growth versus inflation. So they're uncertain about two dimensions. So they can't really just sort of flip a coin and say, oh, well, we're going to worry about the growth dimension because that could turn out to be wrong. So they have to sit and wait for more information. I mean, if you were driving a car in a thunderstorm, you wouldn't just put the car on autopilot and hope that you would get through it safely. So you pull to the side of the road until the weather cleared up, and that's what the Fed has to do. The Fed is going to be criticized for waiting. They have to wait, and because they're waiting, they're probably ultimately going to be late. But it's not the Fed's fault. I would behave exactly the same way in this set of circumstances.
Bill, what's their definition of late? And what's your definition of late? Because he reflected on the move last summer, and he said, in some ways, we were a little late. And other people thought he was being preemptive. What's late to you?
Well, I think late is responding only after you've seen a sizable increase in the unemployment rate, because at that point, it's really hard to avert a recession. When I evaluate the risks to inflation versus the risks to growth here, I guess I worry more about the downside risks to growth. But the Fed can't put all their marbles on that side of the equation, because inflation has been running above the Fed's target for 5 years. And if they're wrong and inflation expectations get unanchored, then it's a really difficult problem getting inflation back down. So I think they have to wait. Because they wait, because they'll be forced to wait, they'll probably be late. Trump will blame the Fed for being late, but the reality is Trump created the conditions that forces the Fed to have to wait.
Bill, I'm just curious, going forward, how much you see the Fed unwilling to move, even if the unemployment rate rises by 0.5 percentage point, which is sort of the trigger that a lot of people are looking at, if you do see those inflationary pressures coming back?
Well, I think if the unemployment rate rose by, above 4.5%, that would change the Fed's calculus. They would be much more worried about the self-reinforcing deterioration in the labor market leading to a full-blown recession. So I think the unemployment rate is really the single most important indicator. If it stays around where it is today, the Fed's going to just sit and wait. If the unemployment rate starts rising quickly, then the Federal Reserve will start to respond. But I think it's going to take some time. I mean, the hard data on the economy shows that the economy is still just fine. I mean, the first quarter GDP report was very misleading, because it was mainly the fact that that they couldn't count inventories properly to match up with the big surge in imports.
Bloomberg opinion columnist and former New York Fed President Bill Dudley there. Still ahead on the Asia trade, the CEO of enterprise software provider Xero joining us to discuss their latest earnings and the business outlook. This is Bloomberg. Online accounting software company Xero has just posted results for the full year, operating revenue meeting estimates. The firm provides financial tools to more than 4 million small businesses in over 180 countries. Joining us now is CEO Sukhinder Singh Cassidy. Sukhinder, always great to have you with us. So talk us through these results, what it kind of says about the macroeconomic environment and, of course, some of the broader policy and trade-induced volatility that we've seen for businesses in a number of markets, but particularly in that core market of the United States.
Sure. Well, first of all, we're very pleased with the results. Overall, 23% top-line growth, $641 million in free cash flow, Rule of 44 on Rule of 40. So really strong, both top-line growth and free profit and cash generation. So overall, really pleased with the results. Now, speaking to that macro-resilient kind of business that we have, we really believe that our software is helpful to SMBs in times of certainty, but also uncertainty. We help them manage their cash flows, get paid sooner. Of course, that is critical, and perhaps even more so in this environment. So, the prospects for our business, we think we are there to help small businesses across the world, US, UK, Australia, New Zealand, navigate this uncertainty.
What is the data telling you in terms of what that uncertainty looks like and how these businesses are faring?
Well, as you know, and you've seen the data yourself, interestingly, U.S. indicators are pretty mixed on whether or not there has yet been an effect. But I think what we can say is, of course, it has been a time of extreme volatility. It seems to be settling somewhat as Trump starts to announce deals. And that is good for the market overall. For our SMBs, the things they are managing right now is there going to be supply chain disruption? Is there cost of goods going up? So I think it is fear of what's ahead. I don't think you're seeing much in the indicators yet. But as I said, our number one job is to help them manage their cash flow as everyone awaits, Trump's further deal making.
Sukhinder, just wondering as well, how much optimism do you see out there among these small businesses about more favorable rate environment?
Interestingly, our small businesses don't tell us a lot about their expectations of the rate environment. What we see more from them, obviously, is really their concerns about managing cash, things like late payments. Of course, one can hypothesize on the rate environment. I am not a macroeconomist. I'm sure you have many on this show. Mostly what our small businesses speak to us about is the need to manage cash.
Sukhinder, you said, this was a pretty good set of results. Are you also happy with the growth in your U.S. market?
We are. I think the U.S. market for us showed strong underlying growth. We reported our North America results, so we saw nice increases in subscribers and ARPU, and I think those are both indications that U.S. business, as you know, for us is small and growing. I think the key thing for us in the U.S. that we see is higher product market fit. We've made multiple investments in just, I would say, better product velocity for that core U.S. market, which for us has a lot of white space in our global portfolio.
I think towards the end of last year, there were some concerns about subscriptions starting to slow down, which is perhaps unsurprising in some of the more mature cloud markets like Australia, like New Zealand, right? What are you seeing in terms of subscriptions at the moment? Are you optimistic, or are you sort of happy with the sort of steady as you goes approach?
Well, first of all, we had another year where we posted double-digit subscriber growth, so 10% subscriber growth overall, and 15% ARPU expansion. So what we see from that is there is still a tremendous amount of white space. In Australia, we still generate a lot of new subscribers to the cloud. Of course, New Zealand, which is our oldest and home market, has slower growth. But across the rest of the portfolio, I would say we still see a lot of opportunity. I will remind you that one of our key markets is the UK. This year, the UK, we think, will experience tailwinds with the introduction of making tax digital, a regulatory requirement for small businesses to file digital taxes. So we see lots of reasons to be optimistic about the opportunity for continued subscriber growth.
I wanted to get your view in terms of the sort of innovation and tech ecosystem in Australia. Obviously, we've come up with a very strong election result. There's more of a mandate for the government here. But Australia has kind of broadly lagged the likes of the US when it comes to coming up with companies like Xero. What's your, input in terms of how that can change public policy-wise, investment-wise?
Yes, well, look, first and foremost, let's not forget you have tremendous Australian-founded companies like Atlassian and Canva that do enjoy a good amount of global success. Of course, there are peers like WiseTech. So I think that we do see a lot of great activity. But I think like any government and any economy, one of the reasons that the U.S. has been so successful and can be modeled after is the incentives for entrepreneurs to start companies, whether that's carried interest, whether that's the fostering of the venture capital environment. I think these are the things that are, in the U.S. you have QSBO, which is really the qualified small business opportunity for entrepreneurs to have 10% tax rather than more on capital gains from starting a company. So I think my advice is probably not Australia specific, but it's specific to all the markets in which we operate. If you want to see small businesses flourish and tech businesses flourish, you need to have, I'd say, incentives that really drive the flow of capital into these businesses and for entrepreneurs to want to create wealth in those countries.
When you look at longevity for this business and what kind of the next steps will be, where do you see growth and also cost containment coming from? Do you still look at organic growth going forward and looking at these individual markets, or are you open to potentially deals and inorganic options as well?
Sure. Well, I would point you, first of all, to our core strategy. We've talked about growing, our big three markets, Australia, the US, and the UK, as being strategic focus areas in this strategic period. We've talked about payroll, payments, and accounting being the big three jobs. And we've also been very clear that we will use organic and inorganic opportunities in order to meet and create that strategic fit for our customers. This past period, we acquired Sift, a leader in analytics for both small businesses and accountants and bookkeepers. We're already well on our way to rolling out access to Sift within Xero across the U.S. and coming soon to other markets. So I think we certainly look at M&A as a part of that strategy and feel like we also have a strong organic base of operations in which to invest capital.
Sukhinder, always great to chat with you. Sukhinder Singh, Cassidy, who's a CEO at Xero. Still ahead on the Asia trade, South Korea poised to become one of the biggest exporters of nuclear technology over the next decade. We'll take a closer look next. This is Bloomberg. Take a look at some of the stories we're following this hour. And Indian officials say trade talks with the US remain on track despite their tougher approach in negotiations. The Modi government this week threatened to impose retaliatory tariffs on the US in response to higher duties on steel and aluminium. We're told a first stage deal is still expected within a month, I should say. Russian President Vladimir Putin has named a group of low-level officials to join peace talks with Ukraine in Turkey, giving no indication that he plans to join these talks. President Zelensky has challenged Putin to meet him for talks in Istanbul after the Russian leader offered to resume direct talks to end the conflict. Earlier, President Trump downplayed the chances of visiting Turkey, citing a packed schedule. Iran is reportedly willing to commit to not pursuing nuclear weapons in a deal with the US. A top advisor to Iran's supreme leader has told NBC News that Tehran is ready to sign an agreement with Washington in exchange for the lifting of economic sanctions. Iran is also reportedly prepared to get rid of its stockpiles of highly enriched uranium. We'll take a look at the implications, particularly as we see those losses being sustained across crude prices. Oil, of course, had already been on the downward trajectory after that 4-day rally, but this is really being exacerbated further by the speculation over implications for Iranian supply. There are also supply elements there when it comes to stockpiling levels in the latest data out of the US as well. So some domestic factors at play here as we see New York traded crude down by just about 1.7%. Iron ore also sitting a little bit lower today. But gold at the moment, after a few sort of back and forth moves when it comes to this session, at the moment actually seeing a little bit of upside, but this comes after it slipped to the lowest in more than a month on the back of these easing tensions in the global trade war. Investors disincentivized from that haven demand that has played out so well for gold this year, Avril.
Yeah, we are seeing, I think, a bit of a reversion to the trends in trading from the past week or so, indeed the past month, that haven demand. I see gold picking up a little bit, but in terms of the stocks that we are watching when trade opens in Australia, Korea and Japan shortly as well, certainly one we'll be keeping an eye on is the Japanese lender Sumitomo Mitsui. We're seeing that climb a day ago, and something that was pretty much across the board among the Japanese lenders. The lender is forecasting full-year net income will climb about 10% to $8.8 billion. That's after the bank's fourth quarter net income fell 75%. Also be keeping an eye on Sony, where the full-year operating income forecast missed the mark, coming in at $10 billion. Also watching how markets react to Treasury wine estates naming Sam Fischer as its new CEO. And in terms of the benchmarks, take a look at how futures are shaping up, with the downtrend, I think, tracking from what we saw on Wall Street overnight. Certainly that sense of a buyer fatigue after the optimism surrounding the easing in geopolitical tensions after the US and China trade truce. Now the concern seems to be that the rally had gone too far, too fast. Nikkei futures also pointing to declines of about 1% at the open. S&P 500, maybe that also indicates further declines in US stocks. Of course, Haidi, certainly something that we've been keeping watch on is the dollar amid what seems to be the US not seeking a weaker dollar when it comes to a trade deal. So a bit of a weakness, interestingly, on the Bloomberg dollar index, Haidi.
Yeah, let's take another look at oil as we continue to watch this story very, very closely. We're still awaiting for sort of further details and confirmation as to what we're really expecting from Iran. Of course, they have urged the US to show a more realistic approach when it comes to these nuclear talks. Iran, though, we are hearing willing to commit to no nuclear weapons in a deal for the lifting of sanctions. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens. And certainly, Haidi, it's really the sense of maybe market fatigue, buyer fatigue in particular, as we saw earlier in the week, that sharp rally in US stocks kind of petering out, and what the next leg or the drivers are going to be. And certainly trade tensions, those are in focus amid this cooling. The focus going to be on what APEC trade ministers can ultimately achieve in their meetings in Jeju. Some signs of further a de-escalation, especially when it comes to China. Haidi.
Yeah, plenty of signs, though, to watch out for when it comes to corporate earnings. Particularly, we're watching to see the Tencent effect, right, as Greater China comes online a little bit later, but also watching the commodities space with this reporting that Iran may be ready to sign a deal committing to no nuclear weapons. So seeing that big move in oil.
Yeah, and amid some of these uncertainties still, I think investors are doubling down on that something to chew on, which is the earnings, right? And we certainly be seeing some reaction when it comes to Japanese stocks following Sumitomo. It more or less met when it came to its results. But going forward, I think the guidance is what missed the mark. So whether this trickles through into some of the other big Japanese lenders that are reporting later today, Sumitomo and Mizuho as well. Certainly that downdraft from the US reflected in Japan as well. The dollar has been, of course, a key focus for today amid signs that, the U.S. might not be seeking a weaker greenback. We are seeing a bit of a tick up in the Japanese yen, really not by much. Yields in Japan also rising today. Flip the board and take a look at how South Korea is faring at the start of trade. Certainly part of that softer stocks narrative as far as things go, but not by much. Seeing some declines on the Kosdaq as well. The Korean won seems to be giving up some of the gains from earlier in the week, potentially part of that narrative when it comes to the dollar story, Haidi.
Take a look at how we're setting up when it comes to the start of the cash trading session here in Sydney. Watching those energy producers as we see the second day of declines there in oil, largely on account of the story when it comes to Iran, hearing that potentially the country is getting ready to be able to sign a commitment to no nuclear weapons in exchange for lifting of US sanctions, but also some supply side issues at play here as well, given that we had some pretty big stockpiles data in the US as well. But we are seeing, just a couple of minutes into trade, a bit of flat trading there for the ASX 200. The Aussie dollar also quite flat, trading at about 64 US cents at the moment. Lots of reasons, those we were discussing earlier, though, for treasuries to continue to trend towards that bearish direction. Let's get some more from Garfield Reynolds, who leads our Markets Live Asia coverage and joins us now. So there's a lot at play here. There's the oil story, the sort of geopolitics story for one. It's interesting. I was reading about these, lottery ticket bets, despite almost every assumption being that we're going to see lower prices.
Yeah, well, you're always going to have stuff like that in oil because you have to remember it's a, to some extent, manipulated market. All that it's going to need is for one of the major players to decide to pull back from the market, or for something to happen that will cause them to pull back from the market. So we've got headlines that the US and Iran are close to agreeing on a nuclear deal. That deal could still not take place, or it could take place, and the market looks at it and says, "Well, this isn't going to work," or there aren't the sort of details that we want. Or alternatively, at any stage, Saudi Arabia could decide that it's happy with the progress that's been made elsewhere, and so it's going to back away from the push that it has been making to boost supplies, the whole aim of that was to bring prices down, partly to discipline other OPEC plus producers so that they would meet their quotas. So if that works, then you have the potential for OPEC to decide, well, it doesn't like $60 oil, it would prefer $70 oil, and away you go. So that's part of what's going on. There's a reason for that gambling, especially when the price probably for those options was pretty low. Overall, however, as I was saying before, it's fairly clear that there's a lot of reasons to expect the downside for oil to continue, even if it probably reaches a natural limit somewhere around the $55 a barrel mark, because, as I said, it's a manipulated market in a lot of ways, and the people who are manipulating it probably don't want it to go too much further to the downside than where it is, and certainly not as far as the 50s, low 50s.
Garth, what about downside for the dollar? I mean, you were highlighting how traders have really kind of made up their minds to focus on the fundamentals in spite of some of these headlines. How much further downside are you then seeing?
Well, there's plenty of downside looming for the dollar, I think, especially against some emerging market currencies. A key determinant, at least in the short term, is going to be how the PBOC behaves. It's sort of switched from restraining declines in the yuan to restraining gains, but it has been leaning towards moderate gains at least. So if that remains the case, that's very much going to see emerging currencies in particular benefit from the idea that a weaker dollar is what they're heading towards. And when you read into it, it was fairly nuanced, the denials or reported denials from the US that they were deliberately seeking a lower currency, a lower dollar in trade talks. It was more that if they were going to seek that, it was going to come from the very top. There is still that attitude that's being expressed by the US administration that overall there are concerns about the dollar being too strong for too long. It is very overvalued on a lot of measures, and a lot of currencies out there are undervalued against the dollar on a lot of measures. So with that being the case, markets are going to be pushing to see a weaker dollar and anticipating potentially some really strong moves in a range of currencies.
And interesting to see all this coming against the backdrop of elevated US yields. Garfield Reynolds, who leads our Markets Live Asia coverage for us there. Thanks so much. Now let's check in on oil prices as well. That decline that we're seeing, as Haidi and Garth were just chatting about, certainly coming from partly what we're seeing in U.S. stockpiles, but also the geopolitics in the mix, right? And how we're hearing that Iran will commit to no nuclear weapons in a deal, perhaps for some sanctions relief. Let's get the details with our Bloomberg News editor, Jill Deesis. So, Jill, what are we hearing ultimately about, what Iran might be willing to give up in exchange for sanctions relief?
Well, at this point, again, these are still lines that really have only just started crossing the terminal in the last couple of hours. And this is based on an NBC report saying that Iran would be willing to commit to not having nuclear weapons in exchange for sanctions relief. So again, I think Garfield just made this point a bit earlier. This is not a done deal by any means. There's obviously a lot that can change. And we've certainly seen some, sort of shifting things happen as Donald Trump has been on his trip to the Middle East right now. So, those are the lines that are here now, but certainly I think that's obviously why that's getting quite a bit of attention this morning.
Quite a bit of attention, but of course this has been quite the trip for the president, right? He really wants to show off his deal-making abilities here. What else are we seeing being achieved, both in terms of geopolitics, some of the commercial agreements that we've seen as he continues on his itinerary?
Right. Well, look, I mean, we all know that President Trump certainly likes to mix deal-making in with a lot of his diplomatic efforts. So we certainly saw that at play in Saudi Arabia just the other day when, he was meeting with Mohammed bin Salman, the Crown Prince, and announcing, some $600 million in various types of deals. The latest that we're hearing is out of Qatar, where the U.S. has announced something to the tune of about $243 billion in deals. A lot of this kind of comes down to defense contracts. So what you see is the United States, vis-a-vis Donald Trump, really trying to develop stronger defense partnerships in region. Obviously what Donald Trump would really want here in terms of a bigger geopolitical play is some kind of way to broker a Mideast peace deal between Israel and Hamas. Qatar sits in a very advantageous position here. And so you do see, Donald Trump trying to sort of tout some of his attempts to, reach out through these diplomatic efforts. Of course, all of this coming on the back of this plane, that Donald Trump has said that he would accept from Qatar as sort of a new Air Force One. So I think that against the backdrop of the United States kind of coming in and trying to broker some of these these types of investment deals, I think all kind of shows you how much interest Donald Trump has really taken in the Middle East. This is again his first official trip abroad during his presidency since he took office in January. So we'll have to see what else happens. But I think, you're seeing very classic Donald Trump trying to be the deal maker here.
Certainly, and he's been very busy, to your point about him being there. Bloomberg News editor Jill Deesis for us. Now, meantime, Japan's top trade officials are skipping an APEC meeting beginning today in South Korea, potentially missing a chance to advance talks with the U.S. on a tariff deal. Our chief North Asia correspondent Stephen Angle joins us from the meeting venue in Jeju. So, Steve, just talk us through what you're going to be keeping a close watch on.
Yeah, we're going to be keeping an eye on who's actually going to be here. You mentioned the Japanese. We're hearing some other rumblings that top trade ministers from other of the 21 nation economies will not attend. But we do know that the U.S. Trade Representative Jamieson Greer is here for these 2 days of APEC trade ministerial level talks on Jeju Island, of course, south of the main peninsula of South Korea. We know that because Jamieson Greer, just a few in the last half hour, there you can see it. That's a picture from our producer, Sabrina Mao, took that as he arrived. He also told our BN colleague, Bloomberg News colleague, James Mager, we are not doing media now. He is going to be a man in great demand here in Jeju because of the other trade ministers and delegations will want some face time with him. Coming off the heels of the meetings with the Chinese delegation in Geneva, finding that 90-day truce, common ground with the Chinese. We do know that his counterpart of China, who was in Geneva, Li Changgang, is also here. He's the Vice Minister of Commerce of China. He arrived on the same plane as our producer last night from Beijing. He will be leading the Chinese delegation. He is essentially the trade representative of China, so the counterpart to Jameson Greer. The big question is, will they be meeting again here in the halls of the International Convention Center on Jeju Island sometime today or tomorrow? No doubt Greer will likely be meeting with the trade minister of South Korea, the host nation. There have, of course, begun talks. The delegation from South Korea was in Washington, D.C. last month, I believe on about April 24th, trying to start the talks about the framework for some sort of trade truce and agreement with the South Koreans. We're hearing from local media that the South Koreans are proposing cooperation in shipbuilding as well as energy. Local media is also reporting this morning that perhaps Greer is going to be meeting with Hanwha Ocean, a big shipbuilding company conglomerate here in South Korea. So that there could be something in the works there. But again, because of the South Korean presidential election is coming up on June 3rd, Seoul has already indicated it would be theoretically impossible to get some sort of deal done with the United States, trade deal to mitigate those reciprocal tariffs, which, of course, like other nations, have been paused for 90 days, but almost theoretically impossible to get a deal done before that June 3rd presidential election. They are still trying to find some common ground and reach a deal by July, before those 90 days expire. So again, it's all about getting FaceTime with Greer and to get more meat on the bone from that truce with China. And what does that mean for the other member nations like Vietnam, which has already started to engage with the United States and other member nations? Keep in mind, 21 economies. We're talking Canada, Mexico, Australia, New Zealand, Vietnam, Singapore. They're all, well, most of them are here trying to get a good idea of where things stand right now following that U.S.-China truce.
And while we wait for those details, we are seeing more sort of concessions, right? China putting a pause on these curbs on rare earth exports to military entities in the U.S.
Yeah, that's essentially China following through on what they pledged to Donald Trump's team, Scott Bessent and Jameson Greer, over the weekend in Geneva. So that's a positive sign that, again, these export controls that China, let's be frank about this, put in place following Liberation Day on April 2nd. They put essentially bans on critical rare earths, including those that lead to industrial magnets, which are critical to the U.S. technology supply chain. They put restrictions on some 28 U.S. entities as well. Those have been lifted, as well as, trade ban that they put in place as well on 17 U.S. companies. That has been lifted. But again, it's just a reprieve. Just like the United States and China announced the truce, that lasts 90 days. This suspension of those export curbs to the U.S. entities on rare earths is only going to last 90 days. So there's extra impetus, obviously, and that's why we're going to be watching whether Greer and the Vice Commerce Minister of China, Li, do indeed follow through on their talks here in Jeju sometime today or tomorrow. We do know that there are other high-level officials here. The WTO Director General, Ngozi, just walked through these doors and passed us just a few minutes ago. She is here. We're going to try to, of course, get some comments from her as well throughout the course of this day to see her perspective from the WTO on the multilateral front, the implications to global trade of following the truce settled between China and the United States in Geneva.
Bloomberg Stephen Angle there for us, and we are watching one stock that is in focus and on the move, Xero. This is on account of Seth Fisher's Oasis management calling on the company to divest its non-core businesses. They're calling for other measures there as well, including the exiting of organic packages, as well as the urging to buy back 1 trillion yen of shares over 4 years. So 7 key changes being urged by Oasis management there. More ahead on the Asia trade. This is Bloomberg.
Well, Welcome back. You're watching the Asia Trade, keeping an eye on yields in the U.S., suddenly seeing them looking pretty elevated on the 10-year, now above the 4.5 level as traders trim their bets on Fed rate cuts, keeping an eye on what's happening in Asia as well. Similarly, seeing some of that come off in APEC bonds. Now, it's also interesting amid all this that we've been seeing the yields for stocks kind of on parity with what we can get from treasuries, particularly if you're looking at the 10-year. So really that dichotomy or dynamic, I guess, on the increased attractiveness when it comes to credit, particularly part of the equation. David Rosenberg is here. He's co-portfolio manager and head of liquid performing credit at Oaktree. So, David, I think you're of the view that we're seeing that rotation out of stocks into bonds. Why?
So, yeah, we're seeing it quite a bit if you think about it. Right now, with below investment grade credit, you can get call around 8%. And I think a lot of people are starting to do the math to say, do you really think from here going forward you're going to get an 8% annualized return out of equities? And I think the reality is to get that, you need quite a bit of growth. And if rates stay roughly where they are, it's going to be more expensive to finance that growth and much more difficult to achieve. And so credit allows you to lock in today an equity-like return without having to take equity-like risk, and that's quite attractive.
Part of that de-risking that's underway. What about when it comes to sort of non-U.S. investors and how they are perceiving the space?
Yeah, so I get this question a lot, which is, are we seeing money coming out of the U.S. from non-U.S. investors? What I find interesting is you are hearing about this and seeing it in equities. You are seeing it in higher quality investment grade treasuries, things that are very liquid. The interesting thing about below investment grade credit is the U.S., quite honestly, is the largest, the deepest, the most liquid below investment grade market, and so it's very difficult to replace it. And so actually what we're seeing is still money coming in to the U.S. from non-U.S. investors. Some of it may be rotating, de-risking, as you said, from equities down to debt, but still seeing good strong demand.
What about in the opposite direction? Do you like the diversity in private credit in Asia, and is there sort of strategies to be able to get more growth in some of these markets?
I do like the diversity in credit in general. I think it's always a good idea to diversify, and I do think that there are some opportunities, especially right now when you look at the private credit market. What gets me most excited is as you kind of think through this potential higher for longer environment, there's going to be more and more of these LBOs that were done 2018, 2019, essentially with free money, and now that money is expensive, and if that money stays expensive and does not go back down to near zero on the base rate, you're going to see companies that need liquidity. And we kind of refer to this as rescue financing. And I do think those opportunities globally, Asia and the U.S., you're going to see opportunities to provide rescue financing. I believe that's going to be one of the best risk-adjusted returns we've seen in a decade. And most of that's going to be done on the private side. It's easier to structure there. And so I do think that's a great opportunity to add to the portfolio.
There's always a sort of the eternal question, the evergreen question of systemic risk when it comes to private credit, right? Do you think that's sort of overplayed if you take a look at the relative premium that you're getting at this point?
I do think there's risk in the market, but I think that you have to be careful painting a market with one brush. Right? Private credit is a big market. It means a lot of different things to a lot of different people. So I think in general, when you look at the private credit market, you've seen a market that's grown quite dramatically. It wasn't that long ago. This was a $500 billion market. Now it's a $1.7 trillion market. One of the many things I've learned from Howard Marks, our chairman, is when markets grow that fast, you end up buying what you can, not what you want to. So deploying capital becomes the chore. And when deploying capital is the chore, you end up lowering your standards, and that's just kind of the reality of markets that grow that fast. So there is definitely risk, and you do need to be careful who you go to invest in the private credit market. But again, there are pockets of private credit as far as non-sponsor. There's niche areas of private credit like life sciences. There's rescue financing. There's areas where you can kind of make your niche where you don't have the same competition, and those are very attractive. If you take the general private credit market, I do believe it's gotten a lot riskier.
Just taking a step back overall, I think you're also of the view that this is a credit pickers sort of market. How are you selecting? What is the strategy here?
So, to me, it really goes bottoms up, one credit at a time. And so you really have to sit down, underwrite each credit to say, if the world doesn't go back to an accommodative, stance, if you will, there's quite a lot of things that can add volatility in the market, tariffs being one, rates being another. And so it really comes down to being good at assessing credit and assessing the downside and the cushion for downside. And if you can do that appropriately, quite frankly, for a number of years, if you were a good credit picker, it didn't really matter because everyone had the Fed put, as they like to call it. And so whether you bought a risky deal or not, the central banks would come to bail you out. I think we're in a period now where it's going to be difficult to rely on that. And in that case, that means if you're good at picking credit, that's going to allow you to shine relative to those who are not.
And really interesting amid all this, how the market has yet for another year had to kind of pull back their expectations of Fed rate cuts,
yes,
right?
That's right. It
David, really good
going,
to chat with you. Thank you so much for coming in and sharing your time with us. David Rosenberg, co-portfolio manager at Oaktree. More ahead on the Asia trade. This is Bloomberg. We're in the midst of earnings reporting in Japan. Certainly one of the companies we're keeping an eye on, Rakuten, and its shares falling almost 9% as much as after reporting a first quarter operating loss that was worse than analysts' expectations. And of course, part of this disappointment was what we saw in the domestic GMV's gross merchandise volumes. Some analysts also pointing out, though, that maybe not all is lost. Tariff impacts from the likes of Jefferies expected to be kind of limited, or at least that is the analysis that we're hearing, Haidi.
Take a look at how we're shaping up, Avril, when it comes to the session opening up in Europe at the moment in terms of futures, looking a little bit lackluster at the moment. We're watching for some of the sort of defence-related rallies. We're hearing that NATO allies are working on a deal to significantly boost defence spending. 5% of GDP is the proposed aim on defence and defence-related spending by 2032. So that is certainly one sector that's going to be back in the spotlight today. This is Bloomberg.
Tencent's U.S. traded shares jumped after the company's first quarter revenue grew at the fastest pace in more than 3 years. That's bolstering investors' expectations. China's gaming and social media leader will weather a potential global downturn this year. Asia equities reporter Charlotte Yang joins us now for more. So, Charlotte, perhaps not that unexpected how solid Tencent's growth was. It's really been seen as sort of this market leader, right? What are we expecting in terms of revenue acceleration from its core businesses?
Yeah, so far, the reactions we got from Wall Street analysts actually are really positive. So there was actually a lot of, I would say, nervous traders heading to this print just because of how the positioning for the shares has been. But so analysts are really happy to see that the company's top line revenue growth that beat expectation, and that there are strong momentum being seen in the gaming business as well as the online advertisement business. And also another key thing investors are watching is how the company, the AI investment, the monetization potential there. But I think it's I think the positive sign we're seeing there is that the AI investment has already been translated into helping the business. For example, with advertisement, when that was at the time spent there, and also the user engagement in some of the evergreen games, as well as in the cloud side. So for Tencent, it's a really strong set of results. And JP Morgan said they expect the consensus estimates to be raised after the top line beat, as well as some positive share reaction. And I think a broader picture is that investors are looking for that earnings clarity, given how the uncertainty with the macro environment. So for Tencent, that's very solid, resilient, and the execution is great. And company has been, I would say, pretty much disciplined and have a clear thinking in terms of how they want to spend those how they want to spend those money when it comes to AI. So yeah, a lot of exciting actions to watch when market opens in about an hour.
Yeah, and it could have, quite an adjacent impact on some of the other markets, right? Not just Greater China, but of course taking a look at, markets like Taiwan as well. What are the expectations on how this potentially plays out?
Yeah, so I think for this week, if we still can recall, JD.com reported earlier this week, and the results are also pretty positive, especially on the revenue side. And then now you have Tencent, that's another beat. And so I think the key thing to watch is how Alibaba will be reporting tonight, as that has been the AI darling since DeepSeek. So I would think the market reactions will probably still be focused very much on Hong Kong. But I think if we get a third strong, results today in a streak, I think that will be important in terms of, helping, stabilizing some of the moves we've seen post the tariff enthusiasm, and will bring some of the tensions and discussions back into the AI theme, and also how that translates into their business growth in the near term.
Bloomberg's Asia Equities reporter Charlotte Leung there. Let's bring for some more analysis Elinor Leung, who's the head of Asia Telecom and Internet Research at CLSA. Elinor, really great to have you with us. Let me start off with Tencent. There was a lot of positivity in these numbers, right? Tell us what you thought about that. I know that just a few months ago you actually raised your price targets. How does this fit in with your expectations?
Yeah, I think Tencent has just reported a very solid set of results. Their revenue growth was 13%, operating profit growth is 18%. The big beat is coming from their online game business. We see both their domestic and international game revenue accelerate to over 20% year-on-year growth, and that is driven by the revived growth of their evergreen game, that including Honor of King, Peacekeeping Elite, Crossfire, Valence, as well as overseas they have Delta Force and Path to Excel 2. They also have a new hit games such as DNF Mobile, Delta Force. Those is driving their first Q gaming revenue growth. They are also benefiting from the growing interest in shooting game in China. They also start incorporating AI in their game developments. The big competitive games such as Peacekeeping Elite that benefit most from the incorporation of AI. They are using AI to coach the new gamers so they can accompany the more experienced gamer. They are also using AI to prevent hacking as well as cheating in the games. And also for the NPC, they are now also powered by the LLM. So in the past, the NPC in the game has a preset dialogue with the gamers, but now if you empowered by LLM, they can analyze the gamers on an individual basis. For example, your energy level, your equipment conditions, and they can suggest different tactics for the gamers that can increase the user engagement and also monetization in the future. In the longer run, they can even use AI to create content in the games, or even create dynamic contents in the game with the gamers based on the gamers' interactions. So there's still a lot of things they can do to incorporate AI to empower the game revenues in the future. Their online advertising growth also accelerate to over 20%, and that is boosted by the ad technology upgrades, a strong traffic growth on video accounts, and also new growth driver from search, as well as their revenue growth from their mini programs. They are also upgrading their tech advertising technology significantly. They're still in the early stage of doing that. They deepen the understanding of the content as well as the products and matching the user interest there. We still see there's a long way to grow because last year's Tencent game revenue is only 120 billion. That's 9% market share in China advertising market. They are nowhere in search and e-commerce ads. So if they can, that's 60% of the market. If they can get 10-15% of the market share in the search and e-commerce ad, their advertising market share can double in the future. On top of that, they also see the cloud revenue accelerate to teens. But yes?
So, Elinor, I just wanted to jump in and ask, so is it correct to say that this set of results gives you sort of a bit more clarity over the long-term growth trajectory? And if so, does that counterbalance perhaps some of the uncertainty from the AI R&D spending? When do you expect that to become a meaningful contributor to value?
Right. So we expect that Tencent revenue top line growth is going to be sustained teens percentage growth that will remain very solid. One is because they have a lot more games now they can launch in the market, and also because the empowerment of AI, and that can boost the top line growth revenue. But the company expect to step up the AI investment. So that's why they expect the profit growth is still growing faster compared to revenue, but the leverage there could be smaller. In the future, is 1.5 times. Now could be smaller than that because they step up the R&D investment in terms of capex, in terms of talent hiring. But however, I think the evolution is very encouraging because apart from incorporating AI in advertising and gaming business, they start incorporating AI features in their WeChat, such as incorporating Yuanbao, which is the ChatGPT chat box within the WeChat ecosystem, and also empower the search capability with reasoning large language model. They are providing AI tools to allow people to create images by converting from the text article in their official account, and also create videos, automatically create the videos in their video account. In the future, we see that Yuanbao can even evolve into AI agents, because Tencent has a very unique ecosystem with a lot of information, with a lot of the transaction scenarios as well as mini programs. So they can use these AI agents to help them to help users to complete more complex tasks in the future.
Elinor,
that will open up new.
Certainly, AI investments, I think, key part of Tencent going forward. But just wondering your thoughts as well. I mean, this week, among some of these Chinese tech companies, JD, Tencent, we've been seeing these beats, right? The next one we're watching is Alibaba. What are you expecting in terms of profit growth there?
Right. So as you see that yesterday, JD.Health all report a very strong set of results. Of course, a big part of that because of the benefit from the government stimulus, which is a trade subsidy program. But other benefit is that we see the consumer sentiment has already bottomed out and start improving. Maybe the tariff war has derailed a bit, but if the tariff war problem can be resolved, we see the China consumptions could continue to improve, and that is very positive for the domestic consumption play, which including JD as well as Ali. So we also expect Ali will able to grow the top line by high single digit, 8 to 9%. Their China commerce could grow at high single digit as well, with 4-5% GMV growth as well as take rate expansion, because they're also incorporating AI in their advertising platform to improve their ad efficiency. So we think that China commerce can regrow, revenue can regrow at high single digit. And the other fast-growing one is their cloud. We see that cloud will also accelerate to 18% year-on-year growth, and also over 20% in 2025.
Growth trajectory intact, it sounds like. Elinor, I think keeping to the theme that we've been seeing among some of these Chinese tech earnings all of this week. Elinor Leung, Head of Asia Telecom and Internet Research at CLSA, thanks so much for your analysis. Now to some other stories we're following from the corporate front. Hon Hai has cut its guidance for full-year revenue growth to reflect the potential fallout from the trade war. The main manufacturer of iPhones and NVIDIA-powered AI servers says sales will expand at a slower pace than its prior projection in March. The company's net income rose to nearly $1.5 billion in the first quarter, beating analysts' estimates. CATL set to raise at least $4 billion, with its Hong Kong share listing set to be priced at the top of the indicated range. Sources say the Chinese EV battery maker is telling investors it plans to price its shares at 263 Hong Kong dollars apiece. The total raise could rise further if a 15% upsize option is used. Shares are expected to start trading May 20th. Bloomberg has learned that autonomous driving company Pony AI has confidentially filed for a Hong Kong listing. Sources say the offering may happen this year. Pony AI has announced expansion plans, including a partnership with Uber to launch robo-taxi services in the Middle East this year, and has gained a permit for autonomous vehicle testing in Luxembourg. Haidi.
Take a look at how Asian markets are faring. Well, about a 40-minute journey into the start of this session, and we did have some sort of buyer fatigue as we have seen investors kind of refusing to push any higher before we get more details when it comes to the trade détente, despite some of the deals being announced in the Middle East trip as well. We're seeing that decline being reflected across the Asian session. They're ending that 5-session rally. These trade talks inspiring, of course, quite a significant surge, but now showing some signs of exhaustion in this part of the world as well. You're seeing the Nikkei 225 up by just about 1%. The Kospi really just trading water, and a little bit of downside here when it comes to trading in Australian equities. More ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade, checking in on the benchmarks in Japan as well. It's certainly a down day, but let's not forget that this is also coming off a pretty long winning streak as far as the topics was concerned. That certainly took a breather just a day ago, so an extension of those losses. Japan's banks are certainly being seen as a drag today, following the likes of Sumitomo Mitsui, maybe accounting a bit more, bracing for the tariff fallout. We'll be watching for some of these other bank earnings later today as well, even though they're forecast to have record profits. Meantime, Japanese chip stocks have roared back into a rally as easing trade tensions fuel risk appetite. Let's bring in our stocks reporter, Alice French. So, Alice, when it comes to some of the drivers for Japanese chip stocks, I mean, we've been seeing how the U.S. counterparts have performed this week. What are you anticipating in terms of the rally in Japan?
Yeah, so like you've mentioned, I think a lot of this optimism is driven by kind of easing tariffs and sort of Trump's more sort of cooperative language that we're seeing. Of course, we saw the US-China trade deal over the last few days. We've seen Trump mentioning that he's going to be rolling back some of those Biden-era chip restrictions too, and that really seems to be driving hopes about the outlook for chip stocks in Japan. I think as well, you know, earnings have not been too bad here, particularly for Tokyo Electron. We saw them posting strong quarterly earnings, better than expected guidance, and a lot of companies coming out with sort of language that is making investors think they could be more resilient than initially feared under tariffs. Of course, concerns still remain as well as tariffs. We've obviously got the competition from China. We had the DeepSeek shock not that long ago, and so definitely it's not that we'll be seeing these, I think, running away, but definitely the sentiment is a lot more positive than it was, you know, this time last month.
How sustainable, I guess, is the rally, given that there's a sense that there is still, you know, fragility in that sentiment, right?
Yeah, I mean, that's the big question, right? And I think a lot of this will really hinge on how well Japan can do in kind of making that deal with the US. Of course, we know that Tokyo is still in talks with Washington. We know that there have been some sticking points around tariffs on cars and steel and things like that. And you can see, you know, that the market is down again today, and there are still a lot of worries about that, and a lot of worries that Japan has not managed to be as quick in brokering a deal as perhaps we expected, considering they were the first to, you know, approach the US for talks. So I think a lot of that will hinge on the tariff talks. But at the same time, you know, Japan has a very diversified chip tool industry. We have companies like Screen, Tokyo Electron, Hoya Disco. You know, there's a big range there, and they do have quite a large global market share. And I think the strength of really their products and their innovation is something that's going to be driving the rally forwards. But of course, it's all going to hinge on trade at this stage.
Alice, to what extent does all this inform potentially what we're seeing in Japan's stock rally that's sort of taken a breather today and yesterday as well?
Right. So as you mentioned, you know, the topics at one point, up until Tuesday actually, was enjoying its longest rally since 2009. So that was 13 straight days of gains. And that's basically off the back of, you know, hopes that tariffs might be, you know, might be a little less than we'd worried. Now, you know, we're seeing profit taking over the past 2 days, and that's not really surprising. Like I mentioned, there's a lot of caution still in the market. Having said that, Japan does have a lot of domestic upsides, right? We've got got this sort of boom in M&A. We've got hopes about corporate governance reforms. Even just this earnings season, we're seeing sort of record amounts of buybacks and shareholder return improvements that are really kind of driving a lot of interest, particularly among foreign investors in Japan. You know, we're seeing investors trying to move money out of the US on worries about sort of uncertainties there. And Japan is emerging as one of the biggest potential gainers in that trend. And so I do think that we will see the rally hopefully pick up again. But I think it's going to be a gradual climb. And like I say, everything is really going to hinge on these trade talks with Washington and Tokyo. And that's sort of the next thing that investors will be looking for, is whether or not Tokyo can really clinch that deal and whether it's as good as investors are hoping for.
Once again, we've returned full circle back to trade. Our stocks reporter Alice French there. More ahead on the Asia trade. This is Bloomberg. Some of the other stories we're following this morning, and Indian officials say trade talks with the US remain on track despite their tougher approach in negotiations. The Modi government this week threatened to impose retaliatory tariffs on the US in response to higher duties on steel and aluminium. We're told a first stage deal is still expected within a few months. Russian President Vladimir Putin has named a group of low-level officials to join peace talks with Ukraine in Turkey, giving no indication that he plans to join the negotiations. President Zelensky has challenged Putin to meet him for talks in Istanbul after the Russian leader offered to resume direct talks to end the conflict. Earlier, President Trump laid down the chances of visiting Turkey, citing a packed schedule. Iran is reportedly willing to commit to not pursuing nuclear weapons in a deal with the US. A top advisor to Iran's supreme leader has told NBC News that Tehran is ready to sign an agreement with Washington in exchange for the lifting of economic sanctions. Iran is also reportedly prepared to get rid of its stockpiles of highly enriched uranium. Well, that's really a story that's been playing out across the last couple of hours when it comes to trading in crude in particular, as we have seen kind of 2 days now of correction back to downward territory, but really extending those losses 1.5%, but off those session lows there. It's not just kind of the prospect of changes to Iranian supply, but also, of course, we had some stockpiles data from the US that showed that build up, as well as these ongoing concerns as to whether even a resolution or a de-escalation in the global trade war could return much in terms of demand out of key markets like China. Brent also off by about 1.4% at this point. We're also watching iron ore, which again sort of on that China story. We did see that bounce back this week to that 6-week high on the trade war truce hopes there, but seeing a little bit of a downside there when it comes to trading in Singapore by about 0.6%. But that comes off the back of a climb of almost 2% there. The ferrous market, though, of course, has these longer-term structural issues really being battered, not just by global trade concerns, worries about global economic growth, but just the fact that China's economy structurally has been shifting so much, and we may not see that return demand for steel.
Certainly, Heidi, it's about the weakness overall in the Chinese economy. But as you know, we've been seeing much of this week that U.S.-China trade truce, how that's really benefited overall Chinese assets. We're seeing potentially futures pointing to a bit of firmness when trading begins in the next hour. And certainly, it's also going to be about how the earnings scorecards from these Chinese tech giants is going to be received, particularly what we got from Tencent. Keeping an eye on dollar China as well. 720 is what we're seeing, and also keeping an eye on some of the other corporate developments. Coinbase CEO Brian Armstrong has welcomed his company's upcoming inclusion in the S&P 500 index. He told us the move is a vote of confidence for the entire crypto industry.
It's a huge moment for crypto to now be in the S&P 500 with Coinbase entering, and it means that crypto is here to stay. People are going to have crypto exposure in all their 401ks, and it points a little bit to, I think, where the future of financial services is going. Crypto is a technology to update the financial system. we actually launched our own index, Coin 50, which is the top 50 crypto assets, market cap weighted. And someday we hope people might actually, feel the same way about getting in the S&P 500 as they do of getting in the Coin 50 index. So it's a great moment.
We were talking a little earlier about eToro's IPO. You see other entrants like that come into public markets. Wondering what it means for you, because eToro is not going to be the only one in terms of entering that crypto versus stocks world. Do you think Coinbase will ever get into traditional way equity trading, or at least tokenized equity trading in a much larger way?
Yeah, well, we think that all asset classes are being tokenized. Crypto, again, it's this technology to update the financial system. That means every company, every fintech, every bank, every payment company, even non-financial service companies are going to be integrating crypto payments. It's kind of like when the internet came out, and first you had .com startups, and then every Fortune 500 company uses the internet. So we think it's going to be very similar. And actually, this is a good thing for Coinbase, because many of these companies, when they come into crypto, they're going to buy our products and services. We actually power crypto custody, trading, payments, especially with stablecoins, which is a big new emerging activity for lots of companies already. And so we're excited about that happening. Now, you specifically asked about tokenized equities. We're excited about those, and we want to lean into the crypto native solutions, not trade traditional securities in the way that many other companies do. We think there's unique advantages to having this come on chain, and so we're excited to explore that. We met with, for instance, the SEC task force on this recently, and there seems to be a general willingness to have these kind of asset classes come on chain now.